For those of you who are just logging in, we're waiting for everybody to get connected, and we'll be starting in about 2 minutes. I think we're ready to get started. We have over 170, well, we have about 185 participants so far in, and so I think it's time that we get started. Let me introduce our webinar today. Welcome to the Waldron Rand webinar on the CARES Act. We'll be talking about the business implications. We have 3 Waldron Rand partners presenting today: Rick DeLugash, Sharon Schaff, and Tom Barrick. Tom Barrick will also be addressing questions in the Q&A portion of our chat dialogue below, and will be helping with Q&A at the end. We've muted all the attendees, so throughout the webinar, if you have any questions, please be sure to add it to the Q&A, which is at the bottom of your bar, not the chat box, and we'll be sure to try to get to them all throughout the webinar. This session will be recorded. Additionally, you can keep abreast of the changing landscape, insights, and news from Waldron Rand in one of 3 ways. You can log on to our website and visit our alert section. Our website is waldronrand.com. While you're there, the second way is to sign up for our newsletter, or sign up to subscribe to our newsletter and our alerts. And the third way is to follow us on LinkedIn. Sharon, would you like to get us started?
Sure. Good morning. Before we dive right into the CARES Act, we wanted to review some of the other coronavirus legislation that has been enacted in recent weeks. Hold on. Here we go. As most of you know at this point, April 15th, the income tax filing and payment deadline has been moved to July 15th. There is no longer a dollar limitation for the taxes that can be deferred, and no extension form needs to be filed. This applies to all 2019 balances due, plus the first quarter estimated tax payments that are due in April for 2020. It does not yet apply to the second quarter estimated tax payments that are scheduled to be due on June 15th, but we would not be surprised if that date gets extended as well. Most of the states have conformed to the federal extension to some degree at this point, but not all, so you need to check state by state. Massachusetts does now follow the July 15th deadline, but so far just for the individual 2019 tax filings. They have not specified anything on estimated tax payments or on other tax types that are due April 15th, like corporations or trusts. We still are encouraging everyone to get their information to us as soon as possible, even if you don't plan to pay until July 15th. Refund returns are still going to be processed as they are. There are other changes that on a state level for non-income tax types that are being provided for as well. Massachusetts has provided extensions and deferrals of sales and use taxes, room occupancy tax, and meals tax through May 31st, 2020. Now, moving on to the Families First Coronavirus Response Act, which is actually effective today. This expands both family and medical leave and paid sick time to provide additional protection to those impacted by this crisis. The act includes technical, which is the act includes an emergency family medical leave expansion and emergency paid leave, additional sick time for 80 hours of paid sick time. Covered employees will get a tax credit against their payroll taxes for any amounts that they need to pay through this expanded FMLA. In order for an employee to qualify, they need to have one of the following 6 conditions. They need to either be subject to a quarantine themselves, have a healthcare provider tell them to self-quarantine, be experiencing symptoms, be caring for an individual who is either told to quarantine by a healthcare provider or by the government. They are caring for a child whose school or daycare is closed, or have a substantially similar reason. Depending on which category the employee falls into, the coverage will be different. All categories are provided with 80 hours of additional paid sick time. But an employee who cannot work because school or daycare is closed will be given 12 weeks of total leave. The amount paid to the employee, excuse me, the slide is not clicking. The amount paid to the employee also differs depending on which category they fall into. For the first 3 categories, those are the categories in which the employee is the one that is sick or being quarantined. They are paid for 2 weeks at their regular rate, and that is capped at $511 a day. So the total exposure or payments to that employee would be $5,110. Other conditions, the employee is paid 2/3 of their regular rate, capped at $200 a day, or $2,000 total, except in the case that I mentioned before where the daycare or school is closed. That coverage goes for 12 weeks. So the total exposure is $12,000. And as I mentioned before, this is refundable to the employer. So now moving on to the big major stimulus legislation that was passed last week, the Coronavirus Aid, Relief, and Economic Security Act, the CARES Act. So the details of this are constantly evolving. As we'll discuss later, Treasury and the SBA released important clarifications just yesterday on the Forgivable Loan Program. So we'll share what we know as of today, but we know that new details and changes will continue to emerge as the days go on. So there are a few individual tax provisions in the Act. We'll just touch briefly on a couple of the bigger ones. The first one is this recovery rebate. Qualifying individuals will begin to receive these recovery rebates, which are based on their income, their filing status, and their qualifying children. It is going to be based on information that the IRS has, be that their 2018 or their 2019 income tax return. But the credit itself is a 2020 credit. And what that means is that if you were not eligible for the credit based on your 2018 or 2019 income, but will be in 2020, we anticipate you will be able to get the additional credit with your 2020 income tax return. On the flip side, the IRS has indicated that if they have over rebated you and you are not eligible in 2020, they are not going to claw back that credit. And this chart indicates, shows you a bit of the phase out, where generally, if you are married, you're generally no longer going to receive a rebate credit once your income is over $200,000. And for single, that's closer to $100,000. The law also makes changes to retirement plan provisions. Taxpayers can take up to $100,000 in coronavirus-related distributions from their retirement plan without having the 10% early distribution penalty. The income itself can be spread out over 3 years. Or alternatively, you can take a loan and repay it within 3 years and not create any taxable income. And lastly, on the retirement plans, the law also temporarily suspends the required minimum distribution rules for 2020. The law also provides, as I mentioned, that the Family Medical Leave Act payroll tax credits, the law provides a mechanism to accelerate the benefit of those credits. And the guidance has not been released quite yet, but is very imminent to enable employers to just retain other employee withholdings that they would otherwise need to remit and retain those, and that would be an immediate reimbursement of those payments that were required to be made under the FMLA or the paid sick time. In addition, there's an important cash flow savings opportunity in terms of the allowance of deferring payroll tax for all your 2020 payroll taxes until December 2021, 50% of it, and December 2022, the other 50%. So this would be coordinated through your payroll companies. Unless you're self-employed, there is a comparable credit available for those who are self-employed, and we imagine that is going to show up on your 2020 income tax return. The law also creates a very valuable employee retention credit, and the maximum amount of this credit would be $5,000 per employee. It is based on 50% of qualified wages throughout the year, and you can count up to $10,000 in wages. Employers eligible for this credit, they were carrying on a trade or business this year, and the operation of that business was either fully or partially suspended due to government orders. The other way to get eligibility for this credit is if your gross receipts in a particular quarter were less than 50% of the comparable quarter in the prior year. So if you are entitled to this credit, you also can take an immediate benefit through that mechanism I was discussing earlier, in which you retain the required deposits of payroll taxes. Or, since this is a refundable credit, if you have more credit than the amount of payroll taxes that you could withhold, they just created a new form, 7200, to claim that refund. And what's really important to note is that you cannot claim these employee retention credits if the Paycheck Protection Program loan, which Rick is about to talk about, if you receive that. So in many cases, this may be a fallback if that is not available. So there were also, in addition to these, there were also a number of favorable business tax law changes that were folded into the law. So Rick, do you want to go forward with these?
Absolutely. Thank you, Sharon. All right. The first one I want to talk about is what I consider the biggest change from a tax perspective in the CARES Act. And that's regarding net operating loss. We refer them to as NOLs, right? Prior to basically 1/1/18, right? When you had a loss in a given year where your business expenses exceeded your income on your personal return, it would create a loss. You were able to carry that back 2 years to get money back where you pay tax. For example, in 15, you would go from 17 to 15. And if you couldn't carry it back, you carried forward 20 years. And additionally, if you had a loss carryover to the current year, let's say in 17, you had a loss from 16 that was carried over to 17, there was no limitation. You can offset all of your income. Well, under the Tax Cuts and Jobs Act that came through in 17, they gave you a lot of additional deductions and depreciation, et cetera, but they also said, we're going to do away with the carryback. You cannot carry back a loss. You can only carry it forward. In addition, when you carry it forward, you can only offset 80% of your taxable income in the year that you carried it forward to. For example, if you had $1 million of income and you had $1.3 million of losses carrying into that year, they would only allow you to take 800 grand. They want you to pay some tax. That extra 500 grand would get rolled forward to the next year. So you're always going to pay some tax. And that's been in place for 18. And as of 3 days ago, or 4 days ago, it was in place for 19. Under this CARES Act, what they did retroactively is they went back and said, not only are we going to allow you to carry it back, but we're going to allow you to carry it back 5 years. And for those of you who have been around for a while, that's what it was 25 years ago. It used to go back 5, then it got changed to 3, then it got changed to 2, then it got eliminated. Well, now it's back to 5. So for 18, you can go back to 13, 19, 14, et cetera. So that is retroactive to losses that you had in 2018 or 19 or 20. In addition, they did away for 18, 19, and 20 that you can offset 100% of your taxable income, not basically the 80% that was in effect last year. So now they're saying you can go back and amend 2018 returns to utilize any NOL that you have to take care of that extra 20% of your taxable income that last year we couldn't take. And obviously the same would be for 19 if your return has already been filed. So in addition, and the biggest thing here is that since it is retroactive to 18, and there's some other things that may affect your 18 return, you actually have to file that amended return within 120 days of March 27th. That is considered a timely filed return. So if you had an NOL on your 18 return, we have to amend that return within the next 120 days. The whole idea of this CARES Act is get liquidity into the economy. So they're saying if you pay tax the past years, carry it back, get the liquidity. Right. Also, there's some other provisions which tie into that. That's the first one, which is the loss limitation. We actually referred to it as the ELL limitation, excess loss limitation. This came in also under the Tax Cut and Jobs Act. Effectively, what it says, in short, it's very complicated, but what it says, when you combine all of your income and losses from active trader businesses, right, and that loss exceeds $500,000 if you're married filing jointly, or $250,000 if you're single, that you're limited to $500,000 in the current year. So for example, if I had $1 million of salary and I had $1.5 million of losses from my business, last year I could only have deducted 500 grand against the current year's income. The remaining losses would get carried forward and effectively, through a very complicated mechanism, gets added to your NOL. So that's how we prepared all 18 returns. And again, for 19, that's how it's been done up to 3 days ago. Well, now they've suspended it retroactively to 18, 19, and 20. So again, if you pay tax in 18 because you were limited on the NOL, on this excess loss, you now have to go back and amend. And this is not optional. You have to amend the 2018 return if you got limited, which is a good thing because ultimately you'll get that money back. And again, for this year, there's no limitation. So if you have whatever loss you have from your business, that can offset all your income, right? That includes interest, dividends, wages, whatever it may be. There is no limitation on those losses. That was only put in place back in effectively 17 or 1/1/18. For the last 20 years, if you had business losses, and you got by all the other hurdles, and there's tons of them, you can effectively deduct that loss. Well, now that's back for the next 3 years, and then it comes back in 2021, although that will probably change. Right, another big change, and this affects a lot of our real estate clients. They had something where, again, they gave you a lot of benefits, but then they limited the amount of interest that you can deduct back on 1/1/18. This was primarily for corporations initially, because it lowered their rate from your 35 to 21%. So they said, we're going to lower the rate, but limit the amount of interest that you can deduct if you're highly leveraged. And initially, it was put in to only have companies that had 25 million of revenue or above. But the way it was written, it referred to something called a tax shelter that goes back 40 years. And that tax shelter basically says, if you have limited partners in your investment, like a lot of real estate investments have, you're subject to that limitation, even though you only have $1 million of income. So that affected a lot of our taxpayers last year. And what they've done now is for 19 and 20, they said they're changing the limit from 30% to 50%, right? However, it does not apply for partnerships for 19 because, for the most part, a lot of partnership returns have been filed. So they didn't want to go back and have to amend all these partnership returns. So the caveat does not apply to partnerships. It applies to individuals, and then it applies to 2020. It's very complicated, but it does affect a lot of people. There were elections you can make if you were a tax shelter in real estate, for example, to opt out of this provision, but that limited some of the depreciation you could take separately. Right. Another big change, and those of you who attended our seminar back 2 years ago, when they put that new law, the Tax Cut Jobs Act, into play, right, they tried to simplify the tax code, right? And prior to 18, if you were in real estate and you had a commercial building where you were a tenant, all right, and you made improvements, or you were a restaurant or retail, there were 3 different types of improvements: qualified retail, qualified restaurant, leasehold improvements. All of those were basically had a 15-year life. By definition, by the code, 15-year life. And under the law, because it was less than 20 years, you can effectively, what we call bonus depreciation, which is basically write off the whole thing in the year that you place that in service or you make the improvements. So prior to 18, it used to be 50%, but they increased it back in 18 to 100%. And theoretically, they expected that if you made these improvements, you can write it off. When they drafted the bill back in 18 or 17, they made a typo, effectively. And when they simplified it and put all this group of qualified retail, restaurant, leasehold improvements, they put it all into this category called qualified improvement property. It was meant to simplify it. What they forgot to do was to put a life of 15 years on that group of property. And if they don't put it in there by code, which all the other 3 did, by default, it becomes 39-year property. Not 15, but 39, so that's bad enough. But more importantly, you're not eligible for bonus depreciation because it's more than 20 years, which is the outside limit you can bonus anything. So what ended up happening is last year, this came up, everybody knew it was a mistake, including the House, the Senate, the President, the IRS, they all acknowledged it, but the IRS said, we cannot change it, it's up to Congress. And obviously with the dysfunctional Congress last year and this year, it effectively did not get changed. So we held a lot of returns for months, hoping it would be changed. It didn't. We filed all the returns based on 39-year life. Well, now they changed it, retroactive to the date of the act, which was September 27th, 2017. So now all of that property that we previously took over 39 years, and this applies if you put in tenants, you do build out, if you built out a restaurant, a lot of that fell under this 39 years. Well, now we can go back and amend 17, amend 18, and for that matter, 19, right? I believe that they're going to come out and give you an option once we get some guidance, and this is, again, changing by the day, but I think eventually you'll be able to, if you wanted to, probably not go back and amend the 18 return, because in a partnership, that could affect 50 people, right? But you may be able to catch up in 2019 or 2020 by filing a form, which we call a change of accounting. It's, it's a 10-page form, you fill it out, and they allow you to figure out what depreciation should have been up through the current year and take it all in 19 or 20. That's not been clarified yet. That's only my educated guess. If not, we have to go back and amend returns in potentially 17 if it happened at the end of the year, or 18, and in some cases 19, because you've already filed those returns. The situation here, though, when you combine this provision with the ability to carry back losses, this creates huge opportunities to potentially, for example, maybe we want to go back and amend 18, because then you can carry it back to 13. Or we may want to go in 19 and we carry it back to 14 or 15. You carry it back to the furthest year and then move forward. So there's a lot of situations that we're looking at. We've been having these discussions where it's going to make sense to go back, or we have to go back and make these changes, and that will create losses, which is no longer restricted either by the NOLs or by that ELL provision, the excess loss provision that I talked about on the top of this slide. So it's a lot of change there. This is a big area that's going to involve a lot of work, and I think it's going to create opportunities to get some money back on some carryback claims. All right, and there were some other minor changes from the tax side, but we're not going to go through that. Now I want to talk about something which I'm sure all of you are hearing about. It's called this Paycheck Protection Program, otherwise known as the PPP, right? Basically, in the $2.2 trillion bill, there was $350 billion set aside for making loans that are up to $10 million that potentially are forgivable. And it's 100% guaranteed by the SBA. And all basically personal guarantees, collateral, all of the things that normally are done with the SBA are waived. John, you want to go? Okay. Now, who's eligible? All right. Basically, this is for small business. So there's another whole section which we're not going to cover, which deals with large businesses. But this program specifically is for small business. And that's defined as basically businesses with fewer than 500 employees. Now, there's a lot of controversy because a lot of private equity firms, for example, own multiple portfolio companies, all of which maybe startups, may have 200 employees. In theory, because of the rules of the SBA attribution and affiliation rules, they may not qualify. There's a lot of lobbying going on now in Washington. We've had a couple of situations that affect some of our clients. I believe they may come down with some guidelines over the next week or two, but that's anybody's guess. Right now, they would not qualify. Right? And then there's also a chart. You could have more than 500 employees in some cases and still qualify if you go to the SBA site and check this size standards. There's a bunch of charts to go through. Right? Obviously, 501c3s with less than 500. And this is something, if you own 5 hotels or 15 restaurants, normally you're going to have a lot more than 500 employees. Well, they allow hotels, motels, restaurants, or franchises, all right, with 500 at each location to be considered to be separate taxpayers. And this also applies to sole proprietors and independent contractors. So if you have a Schedule C, you're still eligible to apply for this program. All right. How do you determine the proceeds? There's been a lot of discussion on this out over the last few days. Seems every 2 minutes I'm getting some write-up from somebody. And because the law is actually being revised every hour as we get something, guidance from the Treasury, everything you've gotten in the past is probably wrong. And this will probably be wrong by tomorrow or later today. But basically, it is 2.5 months worth, or 2.5 times your average monthly payroll cost, and I'll define that in a second, for the previous 12 months. And then there is a provision that if you just didn't get in business until 2020, there is a provision to use 2 months worth. All right. So it's 2.5 months of your average payroll cost. Now, this says prior to the loan date. And after we wrote this slide, some guidance came down in the application from the SBA, which implied that it's for 19 and not up to the date of loan. So there's some confusion as to whether you go for calendar 19 or you go from theoretically April 1st of last year to April 1st this year, or whenever you apply for the loan. Right now, we're going to the assumption that the SBA application is gospel, so we'll go with that at this point. But I would, and we get into what you need, I would have all the information available as well for the first quarter so you can quickly adjust your calculation. So that's the first question, is how much do you get? Second question is, what can you use it for? Basically what they're saying is you can use it to cover pretty much what's defined as the payroll cost above, the payroll and benefits, insurance, interest on a mortgage, but not the principal. And you can also use it for rent and utility payments, right? However, they came down yesterday, late yesterday, we were able to edit, as you can see, that it said that if you want the loan forgiven, that you have to use 75% of these proceeds to be used for payroll purposes. All right, and I would assume that would include the employee benefits, et cetera, but I'm not 100% sure. The idea is that they want you to keep your employees employed during this period of time. If they're going to give you the money and potentially forgive it, they want it to go, in their minds, what is to a good use. Right. Then the other question is, how does it get forgiven? Well, basically what's going to happen is at the end of the covered period, which is defined as the 8 weeks after you get the loan, and then it's going to probably be a month or two thereafter, you're going to go to the bank and you're going to certify to them, show them backup, cancel checks, or whatever they're going to request. And it may vary by bank, right? They're going to ask you, show me that you spent the money on all of the permitted uses. If you did, and you meet some other test, then the loan will be either partially forgiven or fully forgiven. All right, what's included in the payroll cost? All right, we finally got a little bit of clarity on this. Hopefully this is not going to change, but basically it's any kind of W-2 wages, commissions, your salaries, similar kind of compensation that goes on your W-2. This is all going to be tied back to your payroll returns, which Sharon's going to cover in a second, I think, as to what you're going to have to provide. If you have a restaurant, it's the taxable portion of the tips, payments for, paid time off, severance for separation, group health benefits, retirement benefits, if you have a profit sharing plan, and state and local taxes, unemployment, but it does not include payroll taxes at this point. Excluded, and this is a big one, the wages or self-employed income, if you're a sole proprietor, that's over 100,000 per year. Now the key on this, it says wages, but that is really wages, health insurance, retirement. So if you have somebody that makes 120 of wages, they get health insurance that the employer provides of 8, and they get a retirement contribution of 3. If my math's correct, that's 131,000. Well, once you do that calculation, you have to reduce it to 100. So the most that you would get for any one employee, including all the permitted costs, is $100,000. So you effectively have to basically do the calculation and then subtract out so you get down to 100 when you figure your monthly average payroll. All right, obviously if you're paying somebody who lives outside the US, they don't want you to include it. And also qualified sick leave paid under the medical leave that Sharon talked about earlier, that's excluded. and also payroll taxes. Now let's talk about how much will be forgiven. As I said, assuming you meet the test that you spend all your money for the qualifying permitted purposes, then what you do, and this is very complicated and is changing by the day, effectively what they're saying is there's two tests. The first is you looked at your employees at the end of the 8-week period from when you get the loan. And it's the average number of employees, I believe, and Sharon, correct me if I'm wrong, or Tom, but I believe it's the average during that period of time, subject to an adjustment down below. You take the average and you look at that employee count versus, there's two options. Either you go back a year ago and how many employees you had at that point, or I believe you can go to what you had at February 15th when everything started coming up with this virus. But when you look at the employees you have, the average during that period, you compare it to back. And let's assume, for example, last year you had 10. And when you average it out, you have 5 in the period. Let's say you get the loan today and you go to May 31st and you have 5. You had 10, now you have 5. 50% of the loan is forgiven. 50% gets converted to a term loan, all right? Or 75%, whatever it may be. If you have more now than you had, you're golden, all of it gets forgiven. The one thing they did put in, because I'm sure somebody thought about, well, let me hire back all the employees I had, but I'm going to reduce the pay to 10% of what they're making before I meet the test. But that's not the spirit of the deal. They said, when you look at both the numbers, you also have to look at your total compensation. It has to be close to 75%, in excess of 75% of what it was. So they're saying, yeah, you can make some pay cuts, but nevertheless, you got to be close to what you were before. And it's very complicated, still being worked out, but conceptually, that's what's going to happen. You're going to have to certify to the bank, in June. And I believe the end of this program is June 30th, as it now stands, right? We believe, which we'll get into down below in a second, that they're going to have to change it, because when this bill was passed, no one expected us to be locked up until May. Originally it was going to be April. So my guess is they may extend some of these timeframes. Now also, the issue is, all right, that they realize it's going to take you a while to hire your employees back, especially if you're shut down. So when they wrote the bill, they put in this provision that if you hire everybody back by June 30th to where you were before, then you can throw out the period February 15th to April 26th, because that was, in theory, the time you need to hire. And when you average it out, it's not going to be a good result. So they said you can effectively start April 27th to the end of the recovered period. Again, I think they're going to push out that date, but that's purely my uneducated guess. So at this point, no one knows. But you got to be very careful in that planning, because the real benefit, well, two benefits on the PPP program is not only do you get this loan, but if you do what you're supposed to do, it's forgiven. Now, Sharon, you want to flip the next one?
So.
All right. I have to go back. There's one thing I did miss before you get into Sharon, is the loan forgiveness is not taxable to you. So if they forgive the loan, where normally it would be, unless you were bankrupt or insolvent, it would be taxable. It's very specific. It is not taxable. On the other hand, there's no discussion about whether the payroll that you pay with that loan is not deductible. So in theory, as it now stands, you pay your expenses, you get the deduction, probably going to create an NOL, you can carry it back, get some money back. The income is not taxable. Now, if you like taxes and you're in that field, this is exciting, because it causes all types of questions of whether you can deduct those losses, because the typical rule of thumb throughout the code is that if you want to take a loss, you got to be at risk. You got to put money in, you got to borrow money, you got to be on the hook for that. There are exceptions, but that's the general rule. Well, here, and if you're not on the hook, you can't deduct the loss. Well, here, theoretically, you can deduct loss. It will come back to you 15 years in the future when you close that business potentially. It may not be restricted this year. So I believe they're going to come out with some guidance in that, maybe not, but that's an open item that has to be addressed. And I don't think anybody thought of it when they, basically put in this rule and they put it together in 2 weeks. Nobody thought through the implications on all the other code sections. All right, I think that's good, Sharon. Go ahead.
So as we've been saying, things have been changing so quickly. So when we were going through this with clients over the past few days, we said we have no idea what the application process is going to look like, what the application itself is going to look like. And all of a sudden now we have that information. So first of all, in the law, it provided a different range of interest rates, maturity dates, other loan terms that would apply to the portion that was not forgiven. Now the Treasury just announced these uniform terms for all loans, the unforgiven portion. So the interest rate will be 0.5%, the loan maturity will be 2 years, and the first payment will be deferred for 6 months. It also provided timing. So the Treasury Secretary said that this program should be up and running by April 3rd, which is Friday, and are intended to be approved on the same day. We know from talking to banks that they are going to be so inundated, so we'll see how this plays out. But an important distinction by the Treasury was that self-employed or independent contractors have to wait until April 10th, another week, until they can make those loan requests. So that was just released, and now
Sharon,
yeah.
Sharon. In talking with a number of banks, some of the feedback we're getting from almost every bank is they're going to be inundated with these applications and they're prioritizing who they're going to help. So it is going to be very difficult to walk into the bank up the street and say, I want to apply for this. You got to go to the bank you deal with, because otherwise it may take you a while to participate in this program.
Right, definitely. So as I said, as of yesterday, they released a sample form. So Tom, can you walk us through that?
Yep, absolutely.
Yeah.
I just want to address a couple of questions that are in the Q&A that are recurring. One question that keeps coming up is people are asking if they are a owner of an S corporation, what would be countable in the calculation, and that would be the wages which you pay yourself would be countable, but the distributions would not be countable. And again, those are still capped at the $100,000 payroll cost per person maximum. Similar question was if you receive guaranteed payments or you're a single member LLC, which I think Rick just addressed, you will be able to include those payments, again, same thing as payroll costs, capped at the $100,000 per employee maximum. So that's a question that keeps coming up in the Q&A.
Tom, that's assuming it's self-employment income.
Assuming it is self-employment income. That is correct. Yep.
All right.
So this is what the loan looks like, which this is what the application form looks like, which as you can see, it shows the average monthly payroll, which I assume everybody will calculate in, we're recommending people do it in an Excel formula. Ideal situation, we were thinking was you'd create a schedule. You'd have your a column for each of your payroll costs. You'd have your payroll. You'd have your state unemployment taxes. You'd have your retirement benefits. You'd have your health insurance, and you'd add all those up on a per employee basis. And then to the extent it exceeds 100,000, you use 100,000. You could obviously run it with an if formula or whatever. That's something that for those of you who may not be well versed in Excel, may want to ask somebody who is. Then you would take that, multiply it by 2.5 times the average month, and that's the amount that you would qualify for. Again, down here, one thing that you should see is you have to list all owners with greater than 20% ownership stakes because it is an SBA loan.
And you appreciate, Tom, that the fine print of the form does say it should take only 8 minutes to do your Excel schedule, gather everything, and complete the whole form.
It will only take 8 minutes once you have all the stuff and all the calculations put together to complete the form. Again, some questions here. Basically, they just want to make sure it is, again, an SBA loan. So they want to make sure that you haven't committed a felony, you know, that you are basically representing about other SBA loans that you have. There's a question on here as well I want to address. If you go back 1 second, Sharon. There's a question, has a business received an SBA economic injury disaster loan, which is a loan that I'll get into later, between January 31st and April 3rd? If yes, provide details. There is a question that people have that has been coming up, which is what happens if, when everything started, I ran out and applied for an economic injury disaster loan. My major cost is payroll. And now I am starting to realize that the PPP loan might be better for me. What do I do? What are my options? The way we understand it is that those people are going to be able to actually refinance that EIDL loan into a PPP loan. What that will look like, we don't know, mostly because nobody's been issued a PPP loan. But that being said, there is provisions that are out from the SBA because they understand that a lot of people did do that. They got in line, they applied for the EIDL, but now this may be a better option for them. Again, you know, have you committed a crime? Have you committed a felony or misdemeanor? And again, you are certifying to all of these things. This one is obviously the one that you need to you know, initial and make it very clear. The one that Sharon has circled, the funds will be used to retain workers and maintain payroll or mortgage payments, lease payments, and utility payments. I understand if it's not used for the authorized purposes that the federal government may pursue criminal fraudulent charges. Obviously, the goal of the program is to make sure that people are getting this money, keeping people on payroll. They are not intending for people to run out, get this because they find the terms to be attractive with no intention of paying people on payroll. If people are abusing the program like that, looking at it like, hey, you know what, that's great. I'll take, you know, 0.5% for 2 years. I'll take this, lay my people off, never rehire them. You could be brought up on fraud charges. So that, I just want to make that very clear to everybody. So this is the anticipated data that is going to be required by bank for a loan application. Again, as Rick mentioned, this may change bank to bank. This is kind of a good summary of the information that we believe you'll need in order to complete the application. The way we understand it is that you will complete all of your calculations, fill out the form, and then the bank will verify all the supporting data. So what we have been telling our clients for, I don't know, probably 7 to 10 days at this point is start gathering these items because you need to have them on hand. So for payroll tax filings, you need to have all your 941s, your 940s, your SUTA filings. Obviously the quarter ended yesterday. We do recommend that people get their 941, which should be coming out in the next couple of days. Payroll reports, you're gonna wanna run a full payroll journal. There is something, we actually just got an email blast today. The payroll providers appear to know that people are going to be looking for this information. So some of them, and I'm assuming all of them by the end of this week, have actually created a report which you can run in your online platform where you can run the report that's going to be necessary to fill out the applications. Again, additionally, health insurance invoices. So you're going to need the invoices that support the last 12 months of insurance cost. And then retirement plan funding, you will need to be able to prove that the amount that you spent and are putting on your application was actually an expense of the company in the prior 12 months. So make sure you have all this documentation ready. And then for the loan forgiveness, again, I want to be extremely clear on this. It is extremely important that you keep diligent records because at the end of the 8-week period, the bank will have to review your expenses and make sure that all of these amounts were spent on qualifying items. So you will need to keep very diligent records of your payroll reports, payroll tax filings. If you're paying your rent, and that's obviously an includable item, you want to keep support for that, retirement plan funding, all of these things you want to make sure that you keep as backups so you can provide them to the bank at the end, and then the bank will basically verify that you spent the money appropriately. Okay, so the economic injury disaster loans. So this is the larger loan for many people because you may be able to apply for more money in certain circumstances. But the goal of this loan is that these are loans that you can apply for up to $2 million from the SBA directly. And they will basically cover loss as a result of the COVID-19 pandemic. Now, these loans, you actually have to provide a full-on underwriting process where you have to provide financial data, financial statements year to date showing a loss, prior year's tax returns, and most importantly, you have to provide a personal guarantee on these loans. Very clear distinction between these loans and the PPP loans. These are not forgivable. However, there is the $10,000 grant component in there, which a lot of people are asking questions about. I want to clarify a couple things on that. You have to provide a full economic injury disaster loan application in order to receive the $10,000 grant. The grant can be up to $10,000. I want to make it very clear that everybody can't just apply for $10,000 and get the $10,000 and nothing else. If they believe that there's going to be abuse of this program, it's very likely that they may reject those applications. The whole point of the $10,000 is that you apply for a larger loan, say hundreds of thousands or $1 million, $2 million, and in the interim, they understand that there's a longer loan application process for this, so they will give you $10,000 within 3 days, is what they're saying. The point of that is to kind of help an immediate short-term cash flow. So again, these apply to businesses with fewer than 500 employees. Pretty much the same rules, same group of people that are covered. There are loans, I don't want to talk a lot about this, but there are loans available to companies with 500 to 10,000 employees. We don't get into this in this presentation. Most of the people on here probably do not fall into that category, which is why. And the small businesses, again, are defined by the Small Business Administration size standards. One thing I just want to clarify on that in case this applies to anyone, there are certain businesses that may be over 500 employees, but may be considered a small business in the eyes of the SBA. There's a very easy tool on their website that you can put in your NAICS code and your revenue from I think it's the preceding 3 years average, and it will tell you whether or not you meet their definition of a small business.
Hey, Tom,
Yes.
what would happen if I had 4 different businesses or 4 different, LLCs that own real estate? Can I apply for 4 $2 million loans or whatever, whatever the SBA would determine I'm eligible for? Or is it one for me?
Great question. So we've been getting this question from a lot of people, which is, again, these loans, just like the PPP loans, fall under the affiliation rules. So you actually have to certify when you apply for the loan that you have not applied, or you have to basically tell them if you've applied for any other SBA loans or have any other SBA loan applications outstanding. So you cannot have 20 properties and apply for 20 loans for $2 million. Or you can't have 3 small businesses that are all owned by you and apply for 3 EIDL loans. That will not be acceptable.
Yeah, and I believe also, Tom, on these loans, there's a threshold. It's either 250 or I think it's 200,000. That it also, you need security.
Yes.
So it may be a second mortgage in your
once you're
home.
over that amount.
Yeah,
and the other thing
second
is
mortgage in your home or whatever. So
yes, exactly. Another question we've been getting a lot on these is, can I apply for both? The answer is that yes, you can apply for both. What you need to do if you apply for both is you need to keep great records about the fact that you use them for distinctly different items. You did not commingle the money. In other words, you didn't use them for the same underlying expenses. So a great example would be you apply for a PPP loan, you pay all your people with that, you take your economic injury disaster loan, you use that as working capital, you pay your accounts payable, etc.
All right, thanks, Tom. Rick, do you want to kind of summarize all our different cash flow opportunities here?
Sure. All right, hold on, let me get out of this questions and answers. All right, just trying to summarize all of the things, the opportunities to create cash flow, which was the purpose or part of the purpose of this CARES Act, all right? Again, the first we just finished 2 minutes ago on was this PPP loan, 2.5 times. Great, and I would say it's probably the one that everybody's talking about right now because it is forgivable. We have the economic injury disaster loans that Tom just talked about with that grant component. That's, obviously your ability to generate cash. The amended returns that I talked about earlier from carrybacks. You have the amended returns coupled with the carryback claims because of the change in the qualified improvement property. You have what Sharon talked about is the Refundable Employee Retention Credit. You have the deferral of the remittance of the Social Security taxes, which is basically like an interest-free loan for almost 2 years. And then you have the ability to, take a loan or distribution from your retirement plan. All of these items are ways to create liquidity to ride out the next couple of months, hopefully the next couple of months. But that, in short, that's what the purpose. We'll see how it works out. All right, Tom, do you want to go some questions?
Yes, I'm just going through and clearing the Q&A, which got a little bit backed up while I was speaking, so I apologize. Let's see. What's in the Q&A. One thing is, I just want to clarify this. I think we talked about this, but for the PPP loans, those you will go, as Rick said, directly to your bank. You should be reaching out to your banker today, if you haven't already, and let them know that you intend to apply for a PPP loan. More likely than not, what they'll say to you is, we don't have the forms ready yet. And you say, I know, I understand that. However, I intend to apply. So as soon as the forms are ready, please let me know. Whereas the EIDL loans will be available directly through the SBA website. That's something that you could start to do now. Let's see, I have a few questions here.
Tom, I saw something on, somebody asked a question on temp employees.
Yes.
To the temp agency.
Yes.
Whether that would qualify. My understanding, and this is only my opinion, a little bit more than opinion, temporary employees would not qualify, I don't believe. But if you have like a leasing arrangement, the PEO, I believe it's called, where you're leasing your employees from ADP or whatever, that would qualify. But I don't believe that temp employees, unless they come out with some clarity, because it all refers to your 941s, et cetera. And those temp employees would be temp employees of temp agency. So right now, I would not be comfortable it does, but I wouldn't rule it out.
Yeah.
And similarly, the payments that you would make to an independent contractor, those 1099 payments, do not appear to be eligible.
Those do not qualify, yes, I would agree with that.
One question that a lot of people keep asking, which is kind of around the general, use of the PPP loans. This is more of a business advice perspective, Rick. Somebody's saying, I've already laid off my employees. I don't know when they're going to be coming back to work. Should I apply for the loan just to get the loan and bring them back to work because they don't want to get stuck in a situation where they bring them back too early to make it forgivable? What's your advice for clients in this situation?
That's an interesting question, because on one hand, I would say, well, maybe wait a little bit until you think we're closer to opening up so that it'd be enough within that 8 weeks, you'll be hiring them back. On the other hand, there's $350 billion available throughout this country. And there's a lot of talk that could dry up very quickly. So do you want to be at the tail end? Now, I think they will increase that with the next CARES Act 2 or 4 or 5, whatever it may be. But I don't know. I think myself, I'd probably wait a little bit, few days, but probably apply. And you can always hire the people back. And I mean, that's what the purpose is, to hire back. Yeah. So the worst case is
the rehire exemption maybe provides you a little bit of flexibility, because you could claim, look for the loan, see if you get it. And then you have time based on the proceeds that you receive to decide between now and pretty much the end of April whether you want to hire them back and at what timing and not be penalized. So
That's a good point. And in essence, that April date probably would be pushed back. My guess, another 30 days.
Right.
That's, again, just my opinion, but
Right.
don't quote me on that.
Another question here. We have a lot of clients in this situation. I own real estate. I don't have any employees. What do you, Rick, recommend that I do in this situation as far as applying for some of these loans, or just maybe some general business advice if some of these loans may not be the best for me?
Well, I think, obviously you're not going to get the PPP loan if you don't have the employees or a management company. Theoretically, the management company could get it, but assuming it's just, you as an individual, maybe one maintenance guy. I think the first thing to do is to get the cash flow is you go to your lenders. Most all lenders are willing to, give you a deferral and maybe add it to the back a loan anywhere from, I've heard 3 months, 2 months, or in some cases 4 months. So the lenders will work with you. So I think that's the first step. Second one is the economic injury disaster loans would be the other alternative if you can do it. I mean, the problem is you may have a requirement with your lender. They don't want you to place that security, because they may require security on the property. If it's a large enough loan, or you have a personal guarantee, you have to make the decision whether you want to basically personally guarantee something and run the risk that they come back to you. So yeah, first thing is I would go to your lenders and try to get the relief. That's the same thing as, may not be interest-free loan, but at least there'd be a loan
Right.
to ride you through these times.
Another question from a lot of people is, hey, my company is still profitable. I really haven't seen, a huge slowdown, but I see some things potentially on the horizon. What do you recommend that I do in this situation to prepare myself, understanding that I still have to certify to the SBA that I've been impacted?
Well, I think, again, in my opinion, every business has been impacted in some way, or it has a potential impact. You have no idea what's going to happen a month from now. So I think in all clear conscience, everybody can sign something that says, I'm impacted in some way. Somehow in your business, it's impacted the product. In our case, for example, productivity is down. You're working remote. We have 40 people working remote. It's very difficult to maintain that same. So we're down. This clearly would affect us. We may have some receivables that may not pay us as fast. Hopefully that's not the case, but probably will be. So everybody's impacted. So I would apply for the loan. You can, and theoretically, I hate to say that because I don't like normally government handouts, but given the situation, you should apply for it. You'd be foolish not to.
Right. A couple other questions. What about the single member LLC that owns a bunch of real estate, but they have a property management company? A lot of clients in that situation. I believe the answer is that we're advising all of our clients with property management companies that have wages that they should be applying, because very clearly they're going to have a reduction, which we'll find out probably in the next couple of days how severe that is based on rents. That's a question that we're getting from a lot of people in the chat. Let's see. The other question is, what happens if a loan is granted, but then the business is forced to close due to a confirmed case of COVID-19? So you were closed. I think the question is on a PPP loan. What do you do in that situation because you were surprised to be closed? Presumably in that situation, I would advise you would continue paying your people if you want the loan to be forgiven. I think that's the way the person was asking the question, which is, I applied for the loan, I received the proceeds, and now a few weeks into it, I'm closed unexpectedly, so my people wouldn't be receiving wages. They don't want to be penalized, I guess is the question.
Well, right now, the guidelines as of today are pretty clear. The test you got to meet.
Yeah.
All right.
Yeah.
Hopefully, if it's a short-lived closure, then you'll be able to open up, and at least if not all the loan get forgiven. If you decide not to hire everybody back right away, at least a portion would be free. It's not one key thing here. It's not all or 100% forgiven or it's a loan. It's anywhere in between. As I
Right.
said before, if you hire half your employees back, on average, half's forgiven.
Right. We're getting a lot of questions from people also that say, I've already laid off my employees. What do I do now? Should I apply for the PPP loan? And again, that goes back to, in my opinion, you have to look at, do you believe that, 30 days from now, or whenever that's going to be, if it's extended, you will be bringing your work back. I think people are afraid, again, of getting the, getting the money and then having under the assumption it's going to be forgiven, but then not be able to get it forgiven. One point that Rick brought up, if you don't use it, then you just repay it. That's one way to solve that. I think that's pretty much the bulk of the questions. Does anybody else have any other things that they want to discuss?
There's one thing that I just want to clarify. So one question about that 8-week period that ends June 30th. There was a lot of confusion about, and a lot of ways was written and people interpreted that covered period you had until June 30th, that was the covered period. But it's very clear, at least as clear as it can be, and Sharon and I and Tom had a lot of discussions and took us a while to all agree, so I guess it isn't that clear, but the covered period is the 8 weeks from when you take the loan. The June 30th date was the date that if you hire your people back, it would allow you to exclude, and Sharon, correct me if I get this right, it would allow you to exclude the period from February 15th till April 27th, which is 30 days after the act. You can exclude that period in your calculation of the employees of the covered period. So it's possible your covered period, for the purpose of calculating the average employees, would only be 3 or 4 weeks, depending on the timing of the loan. That was, as it now stands, the June 30th date. Again, I believe all these dates may be changed because this thing is extending out further than we anticipated when the bill was written. But that's my interpretation of the June 30th date.
Okay. Let's see. Here's a question. I'm a real estate agent, independent contractor. Should I apply for the SBA loan?
Yeah, you would get, in that case, you'd basically be entitled to get the PPP loan based on your income up to 100 grand. Although you're going to have to provide a lot more information to the bank, and that's they haven't come out with yet, and we really didn't touch on that. But the banks are saying, get us all the payroll information, et cetera. And I think one of the reasons, Sharon, you had mentioned they're deferring the start date for sole proprietors till April 10th or whatever it was. I believe the reason is they have to find out how they're going to prove out what you made. They can go to maybe it's going to be based on last year's return, assuming you filed it, or 19, or maybe 18, or maybe you have to give a current profit loss. We don't know, but you will be eligible. You're capped at, effectively about $8,300 plus or minus, because it's 100,000 divided by 12, whatever that comes out to be, times 2.5. So it's, 20 smart $1,000. So you would be entitled to that.
Great. I have another question that I think maybe someone needs some clarity on. The question is, so only the portion used for payroll will be forgiven, not the portions used for mortgage interest, insurance, utilities, et cetera. That is not the case. What we said is that the way it is written is that you must use 75% of the loan proceeds on payroll, or none of it will be forgiven, which basically allows you a 25% of the loan, which could be used on rent, utilities, et cetera. That being said, you still need to meet the standards of the change full-time equivalents to determine how much of the loan will be forgiven. So hopefully that's clear now.
And as Jeff mentioned, it's the 75% threshold seems to be brand new as of yesterday. Before then, you could use it on any combination of rent, utilities, payroll. as long as you were using it for one of those qualified purposes. But then they did put in their guidance yesterday that because they expect everybody to apply for these loans, they're putting this payroll threshold in. So out of all the costs you spend, 75% of them have to be on payroll.
Yeah. So, Tom, I just want to clear up because I wasn't quite sure of the way you phrased it, but my understanding is that it's if any portion of the loan is forgiven based on the formulas that you have with employees and compensation, you have to have used payroll equal to 75% of that amount forgiven. So that
Correct.
if it's forgiven, only 25% of the amount forgiven can be used for non-payroll related items.
Correct.
Okay.
Correct. Let's see, there's another question in here. It says, what if you're an owner and haven't taken any payroll in 2020? Can you do so now? I guess that would be a question of whether or not you're self-employed or whether or not you are an owner of an S corporation. The way that we understand it, if you've not taken your compensation through wages as an S corporation owner, you probably may not be able to include that. However, if you are a single member LLC or a partner in a partnership and your income is subject to self-employment, we believe that what you would do is basically cut your books up to date so that you could show and verify your income that would be eligible for this calculation.
Yeah, actually, Tom, in that case, the amount of your loan would be based on your records last year in 19. So you would be, if you took salary last year, which hopefully you did if you were an S corp, because that's a problem if you didn't. You took salary, then the only thing you'd probably have to do is once you get the money, you got to put yourself on payroll.
Yeah.
But there's no need prior to that. I mean, anything done in 2020 wouldn't necessarily change. Well, it depends what the 12-month trail is, but what's done is done. There's nothing to do to change the total proceeds.
Right. Another question is, and again, this one is subjective in my opinion, but somebody said, what do we do now? We've kept everyone on payroll. Do we terminate employees? We're shut down. You know, we don't really know what to do, what most benefits a company. And again, I think that's a subjective question, which really goes back to, you know, if you're closed, we don't know how long you're going to be closed. We can't really answer that question. And I think a lot of people are looking for guidance and like there's a black and white calculation or formula, and there just really isn't. Everybody has to kind of survey the landscape and decide what they're comfortable with or not. You know, my personal opinion is if you're in that situation, you would apply because clearly you qualify, you get the money, and then at least you have the money and you can make decisions and you can be flexible as opposed to waiting because you're afraid of not having the money or that it wouldn't be forgiven. That's my own opinion.
All right, and to go on to that as well, just remember that today is April 1st, and so the FMLA is in effect today. So if you do decide to terminate anybody from this point forward, they are likely eligible for benefits under that provision. So you just want to make sure that you're complying with that.
I have another question. People are asking, is the average payroll calculated for the past year or for 2019, January to December? And what happens if you were a new business in 2019 or you just started your business in January of 2020?
It seems to be the provisions provide that if you were not in business for 2020, you can use January, February 2019. You can use January, February 2020 to arrive at your monthly average. And then, as we were discussing before, it's not 100% clear yet whether we're looking at calendar year 2019 or the 12 months preceding the loan date in order to average out the monthly payroll for ongoing businesses.
I have a great question from a couple of people that I really am happy to address, which is what role does everybody play in this process? In other words, what should the client be doing? What should they be looking to their accountant, Waldron Rand, to be doing? What should they be communicating with their banker to be doing? And I think that's a great question because I think what we've been telling clients is you should be gathering this data now. the data that we discussed to make you eligible for the loan, the documents that you're going to need to support it. You should be gathering them and putting those together and communicating that with your banker, assuming we're talking about the PPP loan here. The bank will be involved. They will be who you're applying through. They will be the ones that you'll be submitting the forms to. Obviously, I'm sure there will be questions that will come up to the extent that people have follow-up questions or whatever the case may be. But to the extent that you need help gathering the data or putting the information together, Rick, what should clients be doing as far as putting that together?
Well, I mean, realistically, I mean, obviously, to the extent you could do it yourself, it's, probably much more cost efficient. You have us do it. It's more expensive. So to the extent you can do it, especially if you're closed and you have nothing else to do, put the work together. If you need our help, we'll be happy to assist. But my thinking is, and the approach that we're taking is, I would want to provide all the information in a very nice format that the bank can look at, audit in 10 minutes, and approve it. You don't want to just give them your 941s and your payroll records which, if you listen to the application, the bank will determine the amount based on payroll records, et cetera. But I think if you just give it to a bank and say, go figure it out, you're going to be put on the bottom of the pile. So in my opinion, do as much as you can, organize it, give them all the backup they need. So you submit it, they don't have to think. We'd be happy to help if necessary. But it depends on the situation, whether you have a bookkeeper or a controller or a CFO, whatever, to get that information. It's not that complicated when you get all said and done with the information required. So most people should be able to pull it together themselves, but we'd be happy to help. That's what we're here for.
For another role, you want to make sure that you reach out to your payroll company if you're interested in deferring the Social Security portion of the employer payroll taxes as well.
Let's see, there continue to be a number of questions on 1099 contractors. So 1099 contractors will not be an eligible expense in determining the forgiveness, nor are they includable in the loan base. So hopefully that is clear for everybody asking that question. Let's see. If you're self-employed and you are paying self-employment tax, are you eligible for PPP? I believe Sharon addressed that. The answer is yes. And furthermore, those loans will start becoming available April 10th, correct, Sharon? All right. Let's see. Here's a great question, which I think we touched on, but we can elaborate a little. If you recently acquired a business, you acquired a company in, say, January or February of 2020, you don't have 12 months of payroll data, what do you do, Sharon?
That's the provision that provides for January and February 2020. You can use that data.
Correct. Exactly. So just reiterating that, a number of people are asking for a copy of the presentation, which again, if you could not ask for that in the Q&A, if you could ask for that offline after the fact, that would be great. Let's see. I believe we've answered most of these questions. They seem to be kind of recurring.
Yeah, I think there was one question, Tom, on whether condo fees is, if you pay on an office condo, is rent.
Yes.
I would say that your guess is as good as mine. I would say probably no, because it's a condo that you own. If you had a mortgage, the interest would be, but if I had to guess, the condo fees would not be, unless you can argue the condo fees include the utilities. So can't give you an answer to that one. Hate to say that.
Let's see. And someone keeps asking about medical expenses regarding HRA expense, I would assume that would be an includable payroll cost if it's a valid, as assuming that it's a valid health insurance reimbursement account set up. I believe that would fall into the same category as, retirement benefits or health insurance, those kind of things. I would assume that's a valid payroll cost. Are 401k and disability insurance contributions considered to be forgivable? Again, yes, we believe that's a part of the payroll cost. So it would go into the calculation for the loan base and would also be used in part of the calculation on the forgiveness. I think that's most of the questions in the Q&A. Let's see. Does anybody else have any specific questions? Because I think I've addressed some of these. They might be redundant or recurring.
Yeah, Tom, the only thing I think I want to say, and I want to echo, I think what Sharon said earlier, is this is changing by the day. We had to revise these slides like 3 different times last night because what we had in there. Initially, when the PPP loan came out, I think Sharon said this, it was a 10-year loan with an interest rate of 4% determined by the bank. That's if, and all the information's been sent out for the last 4 days by law firms, accounting firms, although I don't read them, other than ours. They all said it's 10 years, 4% interest. We had, that's what the law said. We wrote it that way. And then all of a sudden, yesterday they came out and said it's 0.5%, 2 years. So this changes literally by the hour. I believe we have most of what's going to be required in the general process. It may be tweaked at this point. But so I would say we have enough information to get ready to submit the application starting hopefully on Friday and into next week. But keep in mind, whatever we said here could change.
We will encourage everybody to go to the Waldron Rand website. You can subscribe to our newsletter. We send out regular alerts, letting everybody know of any updates or changes as we learn them. That's a great way to stay apprised of what's going on. Tom, Sharon, Rick, anything additional?
Sharon?
I think
Thank you guys for
I think we're good.
insightful presentation, and we want to thank everybody for joining us today.
I want to encourage people, if you have questions, don't hesitate to call. Although that's all we've done for the last 5 days is answer calls. So, but don't hesitate. Hopefully we addressed most of the items you'll have questions on to the best of our knowledge at this point. Thank you, Victoria.
Thank you.
Thank you.
Bye.